It's Monday, that means it's setup Monday, and quite the Monday we had. Earlier today, Coinbase reported the buy button being broken. That has a ripple effect across the market. Interestingly enough, if only one side of the market is working, who'd have thought? They have an IPO coming up, folks. Be prepared to buy that one. I'm sure that buy button's going to be working. Nonetheless, it caused a massive divergence on Coinbase. This is the BTC USD price. This is the difference between Bitfinex and Coinbase. At one point, Coinbase was $1,100 below Bitfinex. That was quickly shored up, but by that time, the damage had been done, and off to the races she went. Overall, I think we're, 30% from the top, something like that, on the day as far as the dip is concerned. This is from Ecoinometrics on Twitter. Historic pull downs from the top, pullbacks from the top. Pull downs are a workout. Drawdowns are a trading term. But anyway, you can see where, obviously if you're new and you're panicking and, welcome. First of all, welcome to crypto. But 20% down days happen quite frequently. Although, as far as pullbacks are concerned, we're in the 80th percentile, which means it was definitely an extreme scenario today. And we're seeing a reaction to that now as far as correcting the overcorrection, if you will, from 42 to 30. Now we're back around 35. You might not have been expecting 30 today, but you hopefully were somewhat positioned to where you were okay with a pullback. Hopefully you know what everything I'm about to say, if you know anything that I've said in the past. But let's start with seasonality. Q1, historically, not so great for crypto. Q2, amazing, the best, bigly important for price. If we use that as a roadmap mentally, as far as possibilities are concerned, and we pop on some sort of rate of change, trend metric like the pitchfork, we can say, okay, we expect this is BTC USD on the daily. We expect price to hold at this point above the yellow line, the median line. We also expect this to act as a magnet for price. So it's not out of possibilities that we return to the median line, ideally sometime within this quarter, so that through Q2, seasonality can take over. We go to 100K, everybody's happy. That's one possibility. I'm also watching the yearly pivot here at 21K. 200-day moving average is going to take a little time to catch up to 21K plus, but it's quickly approaching. So there's tons of confluence here. Let's say we get a wick to 20K, 21K. Tons of reasons why that should be support. Much like today, we might get a massive move down, but end up the day, up 20% from the bottom, something like that. That's what I'm looking for throughout the quarter over the next 60 days. So as bad as today's dip was, over the next 60 days, it can certainly go lower. It's not like, okay, the dip's in, bullish continuation, it's all over, the worst is behind us. We were so far above the mean that we still have a ways to go down to even catch up to the mean. We haven't been at the 200-day moving average since September. Now, there isn't a hard and fast rule that we have to hit the 200-day moving average every so often, but eventually the market has a bit of a correction. So like I said, the 200-day moving average is going to keep moving up. So setup for me, my mindset isn't this week, it's the quarter. What is the quarter going to look like? Am I buying dips? Am I selling pops? Am I expecting bullish continuation? Am I expecting bearish reversal? Where are my pain points? Where am I in? Where am I out? Or am I going to decide to just hit the buy button because it looks out of whack, like it did today? So I think that now that it's not up only situation, I think that is part of the conversation you need to have with yourself as far as where do you think price is going to go over the next 60 days. Just keep in mind, historically, it's down over up. Here's another mean reversion that is lurking, and that's the 20-week SMA. We've hit the 20-week SMA in bull runs many times before in 2016, 2017. Now, this was a lot slower. You can see how this happens on a parabolic up move. Price just stops going up, goes sideways, and then eventually taps it, right? That's certainly possible here within the next 60 days. Definitely very reasonable that that happens. Now, the 20-week moving average is going to keep moving up to meet price. But last week and even this week, it says the probability of bullish continuation is lower than the probability of going sideways or mean reversion. And you can backtest that. You can look at other markets, however you want to think about that. We're not just going to shoot up through 37.42 again, most likely. That's the least likely scenario. It's not a non-zero chance. It's just not likely to be the outcome. And if we look at cloud, I've been talking about this for months. We haven't hit the Kijun, this red line. We still didn't hit it today on Bitstamp and on a few other exchanges. I think we hit it on one or two, but we didn't hit it on all of them. Now, if you look at LTC, it overshot the Kijun on the daily by a lot. Alts typically will do that because the books are more illiquid. The sells are bigger, quicker. The holders are weaker. They panic a lot, so you don't see support levels hold cleanly like you do for some of the bigger coins. But if you're just trading the cloud crosses, Kumo breakouts, you're still holding. You don't even care what happened today because we are still riding high above the cloud bullish TK cross, all that stuff. This is of no concern to you if you're just trading the cloud. Even if you're trading the fractals with the cloud, using them as stops, your stop loss isn't until 27.5 or something like that. So this, for you, if you're trading that system in this way, doesn't even matter. Now we'll get an additional fractal here at 30K, so your trailing stop loss is going to get moved up here if you're trading it this way. And you're in this situation now, or do you get stopped out at 30K? Do you buy the Kijun? You're looking at this massive downside. If the Kijun doesn't hold, this is the level to hold if we're going to hold it at 30K. That's it. That's the line in the sand. Otherwise, we're looking at, based on the cloud alone, deep retrace. And that's when you're getting towards the yearly pivot, 200-day moving average targets. But let's say we don't do that. Let's say we hold here. Let's say we make some sort of pattern over the next 60 days. We're still risking this 2600 level. You can already see it. 2600. 26,000 is what I mean. You're already starting to see this flat Kijun or flat Kumo on the cloud form. So there's going to be a level here, a target, that if we consolidate and fail to make a bullish continuation, and it's way too early to tell what's actually going to happen, because we can just M double top, we can triangle out, we can ascending triangle with a bullish bias, we can descending triangle with a bearish bias. Nonetheless, 26K is going to be the level that if we do not make a bullish continuation, that's definitely where we're going to hit, because that's an edge-to-edge move, another sort of cloud nuanced trade. But that's where it's headed if we fail to consolidate and move up over the next 60 days. Now, if you're trading this super aggressively on high leverage, you can look at the 4-hour and say, okay, what happened today was the best thing that could have happened because my 4-hour signals are starting to reset. The TK cross will flip bearish here over the next few candlesticks. Cloud will do cloud things. It may not go completely red over the next couple days, but it'll get close. Ideally, this all resets to just all bearish and then all bullish again, and you get situations like this where it's obvious where your entry is and there's no question what you should be doing. And just looking at this, there's the possibility of a head and shoulders here on low time frames with a diagonal neckline somewhere around 33K. We get another shoulder here, and then we retest 33K, and if we break through the 4-hour, then there's your short entry signal on low time frames. Looking at ETH, I've been talking about this pitchfork for what seems like a long time at this point, but we were at the top of it and we found resistance. Maybe magic voodoo. I don't know. I don't know what to say. I don't care how it looks or should look. I just know that there's an expectation of resistance here. It resisted. Okay, game on. These levels are being respected. Perfect. My lens for Q1 for ETH is no different than BTC. Q1 is not historically super great for ETH over the past few years. The first 2 years early on it was, but after that it has not been. So just as with BTC, a yearly pivot tap, a 200-day moving average tap, a median line tap, all on the table here. Obviously that's a 50% move down from here, which would be massively gross looking on the chart, but certainly within the realm of possibilities here. So my mindset is not, I expect bullish continuation to all-time highs and beyond this quarter. It's not there. Definitely a wait and see in the near term. Definitely a expectation for some sort of bearish reversal here over the next 60 days. ETH also has CME futures coming February 8th, which may mark some sort of top as it did with BTC. We'll see what happens when that happens. But anything at near 600, anything Yeah, basically we Eiffel Tower back down to the 600 level. This diag would be good. Anything down there is a massive buy, trend-wise. Looking at cloud, we came pretty close to hitting the daily Kijun here at around 900 for ETH. And again, there's nothing that I can think of right now that makes this look mega bullish, right? For me, this is just a massive wait and see. You know, you're either scalping this, which means you're doing everything on super low time frames, or you're starting to risk off more and more the higher we go here towards the highs. You know, I don't know if we'll revisit the highs, but that's why you get things like an M double top, is because you get these sell-offs like we do here, price recovers, and then everyone's like, oh, I better sell again. I didn't sell last time, look what happened. You know, it depends what the market feels is the path going forward. Collectively, bullish or bearish moves are decided, so if it's bullish continuation, we'll get some sort of ascending triangle or whatever. If it's not, you know, if it's an M double top, then we're looking at 835 or lower. And much like the 4-hour BTC cloud, for me that's preferable because the move for ETH at BTC is kind of done. You know, you either were in it or you weren't. But now we're just going to chop around for 60 days and figure something out. I would much rather get an entry like we did in November, where it was just an obvious no-doubter, bullish TK cross, Kumo breakout to the upside, set and forget it situation. Here's a 4-hour ETH. It's been a little messier than BTC, so it's harder to be as convinced that, you know, even if this resets, we're going to get some sort of strength because it was so choppy for so long and then caught up. But it's still reasonable to watch the 4-hour and trade it as though, you know, if you're trading on leverage or whatever, not investment advice, on lower time frames, it's certainly reasonable to just treat everything as you normally would. Bullish TK recross above the cloud, blah, 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 all that should be bullish. And then lastly, you know, I haven't really looked at mini alts today just because most of them either didn't do anything or they sold way off. But stuff like Link, the higher cap coins, this quarter, again, I'm thinking, okay, where's the mean reversion? It's barely, for Link, it's barely any lower than price is now, somewhere around $11. But you've got the 200-day moving average, which it's already tapped multiple times over the past 60 days, 90 days. Yearly pivot at 11, the pitchfork diag at 11. So ideally you're buying 11 and you're selling 50, 60 through Q2. And the reason I talk about Q2 versus Q3 or Q4 is because Q1 and Q3 are historically the not so great quarters, and Q2 and Q4 are the much better quarters performance-wise for bullish price action. So I wouldn't get panicked or freaked out today, especially because of what happened with Coinbase, the nonsense there. And overall, as nasty as this looks today, it's really not so bad based on these high time frame trend metrics. It just gives you the perspective of how overbought we were for however long we were. You know, since the end of 2020, we were just straight moonshot. So all this was certainly in the cards and is now behind us and is honestly for the better.